Welcome to the Payments Pulse, WalletConnect's brand new show where we interview top experts from the payments world of traditional and crypto finance. We want to find out what is going on in the world of money. And today we have our first guest, someone very special, the CEO of WalletConnect. Please welcome to the show, Jess Houlgrave.
Hi, Diana. Thank you very much for having me. I'm so excited for this.
So happy to have you here, Jess. Now, you have an incredible track record. We would love to find out more about your background. Could you walk us through?
I mean, I have to go back quite a long time to the start where I started in the traditional finance world. But about just over 10 years ago now, I learned about crypto, and I was working in traditional finance at the time. I also had studied at university the history of monetary systems. So I was instantly hooked on Bitcoin, especially what it meant for as money, as this asset that we could use as money. And then I built a project in the crypto space called Codex, where we were using blockchains to track the provenance of physical assets like artworks, for example. After that, I moved to a payments company called Checkout.com. So this was a payments, not crypto specific, just broad card acquiring, other payments based in London, amazing company. Joined them just after their Series A. Spent a few years there as chief of staff, did a whole bunch of things, got to work right across the company. But I really missed the crypto space. And so about just over 2 years ago, I had the immense privilege of joining WalletConnect. And it's been a wild ride ever since. And it's really interesting for me, especially coming from the payment space, to see how important crypto is now in terms of payments. For a long time, I was sort of dreaming of the day that I would be able to actually use my crypto to buy stuff really easily. And it's actually happening. So we have a lot of work to do at WalletConnect to make that work, but it's very fun.
That is so cool. I actually didn't know that about you. You're such an OG, and I think we're super lucky to have you leading WalletConnect Pay. Now, you did mention that you worked at Checkout.com, and that is a very widely known company. What are some lessons that you can think of that crypto could learn from Checkout.com in your experience?
Right at the core of payments, whether you are making a card payment or a crypto payment, at the core is two real things. How good is this as a payment method for an end user? So that comes down to user experience, how fast is it? What kinds of protection does it give me as a consumer? Does it come with extra charges? There's this kind of user experience element that is really, really important in payments. One of the things that I really saw during my time at Checkout was the emergence of open banking, which had all of this promise, right? Super cheap, really easy to use open banking, but the adoption is really low. And I think that's because the user experience is kind of clunky. You get redirected from place to place. The payments experience is not a particularly intuitive one. And so one lesson for me is we've got to make crypto payments super simple, because the bar on Web 2 payments is really high. I just take my phone, I walk into the coffee shop, I tap, and I'm done. If I have to pay with crypto, do 20 more steps and it takes me 30 extra seconds, it's not going to be competitive. So lesson one, we need great end user experience. Lesson two is merchants have all of these options at their fingertips, right? And ultimately what they want to do is accept payments from as many people as possible. That's why crypto is great, because especially you have people traveling, they don't have the local payment methods, they can use crypto to pay. So crypto is great for that. The second thing is merchants really care about the cost of their payments. If you take an e-commerce store where their margins are quite thin anyway, if their margin is only 5 or 6%, and they're paying 1% on fees for payments or 2% on fees for payments, if you can save them even just a little bit, it goes straight to the bottom line. And that's really good for their profitability. And here again, I think is where crypto native payments have a real opportunity, because they can provide a cheaper payment method for those merchants. So we have at our fingertips this amazing tool that we can deploy that is going to be really beneficial to end users and to merchants if we get it right. But the third lesson that I learned is like every payment method takes a lot longer than you think to really get adopted. In the US, we've had faster payments for like 10 years now. Everyone was like, oh, this is going to be amazing. It's so great. Literally less than 1% of payments are faster payments in the US. We're still using checks, and like it takes a really long time to change behavior. I think that's probably the final takeaway, is that this is going to take quite some time, but I think it has great possibility. So I'm excited to make that happen.
I am nodding vigorously at everything you're saying because it makes so much sense. And you mentioning checks, that just made me feel like we're back in the 20th century, but people still use them. So yeah, exactly. Now, why does WalletConnect Pay need to exist? What problem does it solve?
So WalletConnect started back in 2018, and it started as this open network that would allow apps and wallets to communicate with each other in a secure and encrypted way. What does that mean? It means I can take my wallet to an application and interact with that application, make a payment, buy an NFT, sign an off-chain message. The beauty of WalletConnect and why it started was because we had this two-sided problem where we had lots of different crypto wallets and lots of different crypto applications, but they couldn't communicate with each other. And without WalletConnect, what you end up with is, for an application, needing to integrate wallet by wallet by wallet, which just takes up a ton of time, and for each wallet to be able to communicate with each application differently. And so WalletConnect is really grounded on this shared set of open source standards that make this communication easy. And because in crypto, every app and every wallet pretty much adheres to this standard, it makes it much easier for both users and developers. So in the context of payments, what that means is that instead of like a closed loop system, so I go to a shop and I can only buy if I'm a MetaMask user, but I can't buy if I'm a Trust user. That doesn't make any sense. That would be like a merchant saying, hey Diana, you can come and buy a handbag, but only if you bank with UBS. You can't buy a handbag if you bank with anyone else. Like, just money is money, right? And so the beauty of WalletConnect is that it's this open network, which means that whatever wallet you use as an end user, you're going to get the same experience and be able to use that wallet wherever you want to be able to pay. And that makes it very differentiated from most of the other crypto solutions out there, which are these like one wallet only, closed loop systems. WalletConnect is a true network, and the best payment methods are networks. We know that through Visa, MasterCard, and a lot of the other networks out there.
I think going back to your initial point, that user experience is so key for anything to get used and to get adopted and to truly make a difference in the world. WalletConnect Pay really strives to make things efficient and easy, and has a track record of already doing that in the crypto space with its initial technology. And now, like you mentioned with the network, there's a massive opportunity. Now, to the viewer who maybe is not super techy, maybe your regular merchant, your POS provider, how would you explain the mechanics behind WalletConnect? How does WalletConnect Pay work?
So what happens with WalletConnect Pay is that we are creating a session between an app and a wallet, or between the payment and the wallet, to enable a single payment for an end user. So often this is displayed as a QR code. The merchant on the point of sale types in the amount that they need to receive. And in that QR code is all kinds of information that allows the wallet to understand what is needed from them. So it will say how much. It will also give you the choice of chains and assets that are accepted. So we have some payments providers who will accept any asset. They'll say, yeah, you can pay me in Bitcoin, Ethereum, whatever. And we have others who say, I only want to give stablecoins as an option, for example. So this QR code or this link contains all of that information. When I, as an end user, then scan it, I get the choice of what asset, what chain to pay on, and I click pay. We've got to make that a nice, easy, one-click user experience to make the payment. And at the back end, what is happening is we're doing things like screening the wallet address for sanctions, making sure that these funds are not sanctioned. We are collecting any other information that's required from a compliance perspective. So for example, like travel rule data, who is paying, we can collect that from the end user. Then we take those funds, we work with licensed partners to convert them into fiat, and ultimately we settle usually in fiat, although we can settle also in stablecoins, but we settle in fiat to the merchant or to the payments company. What it means for a payments company or for a merchant is it's kind of the same as any other payment method. They don't have to understand crypto, they don't have to have wallet infrastructure, they don't have to like build all of this out themselves. It's a really easy kind of like flick button for them to just offer this as a payment method to their end users and to ultimately just get fiat out at the back end as they do with any other payment method.
God, I love tech so much. And we come back to the question of simplicity. And I think that when you look at WalletConnect and its history, the QR code is so emblematic because WalletConnect's been able to embed that QR technology to make things simple in the crypto space and now in the payment space once again. And like you said, for the merchant being able to collect payment in whatever form that comes, that opens a massive new avenue for merchants to sell goods, services, products, whatever that is with crypto. So very, very excited. Now, zooming out a little bit from the tech itself and looking at the world of fintech and crypto, how would you describe the current landscape? What are you noticing?
I mean, stablecoins is just like top of everybody's mind. A couple of months ago, I was in Las Vegas for Money 2020, which is one of the biggest like finance, fintech, banking conferences in the world. And I was there 3 years ago, and I was there with a bunch of crypto people at the time. And there were a whole group of us who were thinking about this, but 99% of people at that conference were not interested in crypto payments. And this year, literally as you walk around, like, and you're overhearing people's conversations, it's like stablecoin, USDC, stablecoin, crypto, Bitcoin, like everybody is talking about it. Maybe the only thing that was more popular was AI and agentic payments, but really like crypto was the topic that everyone was talking about. I think that makes sense. If you're a bank, you're a neobank, or you're a wallet provider, like you have to be thinking about this because it's disrupting the whole financial infrastructure. So if you're a neobank right now, you're trying to provision your users with a wallet, you're going to give them stable coins probably, you're going to give them access to yield on those stable coins, and ultimately you want them to be able to pay with those stable coins. You want to make them useful. So you're going to be wanting to embed the WalletConnect wallet SDK so that I can take my neobank wallet and pay for goods and services. You may not even have users who know that crypto is behind that. It might just, some of my favorite crypto apps are payments apps where it just says US dollars. I don't even know what the tech is. I don't know what the chain is. I just know I have a US dollar balance. I can send that to my friends on the platform. It's really, really, really simple. And so I think that's one of the big trends. The other big trend is really in the institutional space. The number of institutions now who are thinking about treasury management, how they hold and access crypto effectively, what they do with their crypto is really interesting. We used to have, a big part of the WalletConnect history is like retail crypto wallets who wanted to connect with applications. And we had a few institutional wallets, like Fireblocks is a very early partner, for example. Their customers wanted to be able to do stuff with their crypto and interact with applications. And in the last 12 months, we've had a host of new custodians joining the platform. I think we announced 8 new custodians in the last quarter, where these custodians, their customers want to do stuff with crypto. They don't just want to hold it anymore. They want to stake it. They want to trade it in DeFi. They want to vote, participate in governance, all of this stuff. And so we're seeing this other big shift with RWA and like institutional capital where crypto is really changing the whole landscape. It's super exciting.
That's such a great point. And actually, speaking of custodians, I can recall the exact quote, which came from Hex Trust, Palak, who works there. We had a WalletConnect event in Singapore at Token 2049, and that is exactly what she said people want, their customers want. So we're seeing so many more applications. And I think it's so cool to think about how this technology is proliferating among people who used to brush off crypto as this kind of fringe technology some years ago. And now they're seeing it as the next wave of innovation that's already here. And they really just want in. They're perhaps seeking the infrastructure and the right partner to make that happen. On a smaller scale, if you are a POS provider or a merchant, what might be the benefits of accepting crypto?
The obvious headline benefits are cheaper payments. You're going to pay a lot less probably for a crypto payment than you are for a card payment. Faster settlement times. Settlement times with traditional payment methods really vary, but in some countries they can be up to 30 days for a card scheme, which is crazy when you think about the working capital that means a business needs to have, because they're selling something and they only get paid for it 30 days later. With crypto, we can basically do definitely same day, sometimes same hour or same minute settlement. So this completely transforms the balance sheet of a merchant in terms of how quickly they can recycle capital and put that money to good use. So those are the two key things. The third thing I think is that you're opening up to a different pool of buyer. Really interestingly, Jen, who leads crypto at Stripe, they switched on crypto payments earlier this year. And there's a great quote from her online where she says that one of their customers, when they switched on crypto payments, saw the average transaction value of a crypto payment 10% higher than regular payments. So really interestingly, maybe crypto payers have even higher transaction value. They want to pay more. So you're opening up to different buyers. You're making cross-border transactions much easier because especially cross-border card fees can be super high. So you're saying, pay me with crypto. It doesn't matter where you are in the world. You can pay for goods and services. When I was traveling to Argentina, we had the WalletConnect offsite a few weeks ago. As you know, in Argentina, I had this moment where I was on the phone to an investor and my phone was about to die and my battery pack was already dead. So I went into this shop and I tried to pay with 3 different cards. I had US dollar cash, but they wouldn't accept US dollars. Investor probably wondering what happened. And it just made me kind of crazy that it was so hard for me to pay. And with crypto, of course, you solve that because crypto is global. I can take my wallet. Doesn't matter if I'm in Singapore or Argentina or here in Portugal, I should be able to pay with crypto. So there's all of these little benefits that you get when you start thinking about it. Another one that somebody said to me the other day was that he was hosting an event for some clients in a nightclub. And they obviously had a really fun time because they kept hitting the card limit. So he kept having to call his bank and be you need to unblock the card limit. And again, crypto payments, we can change the policies, but ultimately you could allow any limit in terms of a single transaction. You're not having to use 3 different cards to cover your nightclub table bill. And so there's all of these new things and the programmability of this in terms of recurring payments going forwards. So much to be excited about, but I think the headline is if you are a merchant or a payment service provider, you've got to think about this now and you've got to start offering it because we're seeing the demand there and we're seeing people want to pay with crypto and we're seeing the benefits that it can bring to merchants. So definitely time to start thinking about it.
Absolutely. And I can't even imagine going to a nightclub and having to constantly call the bank because imagine being on the line and having the elevator music and waiting to explain to an agent that you're buying something expensive. That is wild. Where do you think the current payment system may be fragmented or broken, and how do you think crypto can fix that?
Gosh, having worked for a few years in payments and seen all the layers and the interoperability, fragmentation is definitely the right word. There are some great reasons for fragmentation, right? Payment methods have evolved to be often highly localized, which gives a very specific experience that might work really well in that specific country. So in Asia, for example, QR code payments is a really familiar form factor. Everybody is used to just scanning the QR code. The US, way behind in terms of the experience of scanning a QR code to make a payment. And so we have these like different user experiences as we go around the world. There's also different compliance things that impact the payments experience. That impacts everything from fees and regulation to information that needs to be collected when I pay for something to what assets are even like illegal to pay with. So that we have this like geographic element, we have these different payment methods on top of that. Currencies are obviously a kind of a form of fragmentation as well. And that leads to a lot of cost because you need these intermediaries in the middle, and it leads to a lot of friction, especially for a merchant, because as an end user, you kind of tend to have one or two payment methods and you stick with them, right? So like I'll have my cards and my Apple Pay, I have a couple of different payment methods, and like you're kind of loyal to them. But as a merchant, you want to be able to accept payments from everyone. You don't want to say, oh, I only work with Visa but not MasterCard, or I only work with X but not Y. And so it means that the merchant, or very often the payment company that supports the merchant, is having to deal with all of that complexity and offer 250 different payment methods just so that a merchant can accept payments from everyone it wants to be able to accept payments from. Then you have to do a lot of reconciliation, make sure that all the numbers add up, make sure that you're getting settled in time. So there's a lot of friction at the back end. That's why payments companies exist, is often just to manage that fragmentation and that interoperability. Now with crypto, you obviously get a lot of benefits. We talked about some of those in terms of speed, cost, etc. But I think the most interesting one, especially with WalletConnect Pay, is that it's completely agnostic to what chain, what asset, and what wallet you're using. And this means that any crypto holder basically in the world can make a payment when they see the WalletConnect Pay sign. So that hopefully is going to solve a whole load of challenges when you go to a shop and today it says, I accept crypto, but really they mean they only accept Bitcoin, or I accept crypto, but actually they only mean it if you have a MetaMask wallet. All of that goes away because you can pay with WalletConnect Pay with any wallet. So I think that's really exciting. And that's also then why we partner with those payments companies, with those PSPs, is because we take all of the crypto complexity away from them. So all they need to do is plug WalletConnect Pay in, and then they can offer that very easily to their end users.
That is so cool. Just plug and pay. I can't even imagine, if you're a payments company, the headache you must go through when you're trying to settle all the numbers on the back end. That sounds exhausting. So I think that these companies have something to look forward to as well. Let's talk about crypto cards. Do you think that crypto cards are truly something innovative and something that is useful? Or do you think that it's just an older system putting a crypto wrapper onto itself?
The other day, somebody asked me about crypto cards, and I said it's a little bit like putting lipstick on a pig. And what I mean by that, which is a bit rude, what I mean by that is all a crypto card is like a veneer on the old payment method. When you think about the flow for a crypto card, what you're doing is you're taking crypto, and then at the moment that you make a purchase, that crypto gets converted into fiat, and then it goes through the traditional payment rails. So it's great for an end user because I can hold my assets in crypto. Terrible for a merchant because I'm just paying basically the same fees and having the same experience in terms of settlement time, etc., as I do with the existing card schemes. What I will give it great credit for, and I love, is that consumers have got into their head, I want to be able to hold crypto and pay with it. That's really interesting. And the second interesting thing is that we see the numbers go up month on month on month. The growth of people wanting to pay with crypto is crazy high right now. I love that because it really validates what we're building. It says, yes, like what you're building is 100% the right thing. I ultimately think it's not the right long-term solution for the industry because all it really does, as I say, is just put this like veneer on otherwise very outdated rails.
Do you think that WalletConnect Pay is poised to beat the card networks and that whole system in its current existence?
The card networks are incredibly successful because they do an awful lot for payments companies, for merchants, for end users, and they are an incredibly important part of the payment system today. I do think that they are a little outdated, And I am very excited to be able to offer an alternative to that, to the ecosystem, which is a global network from the very beginning. I imagine for quite a long time we'll be sitting side by side with them. I don't imagine that everyone's going to move away from cards instantly, but I would love one day for WalletConnect Pay and for crypto just more generally to be in a position where it's the predominant way of moving money, for sure.
I think if the trend continues to hold as with what we're seeing, this will probably happen sooner rather than later. And when that does happen, well, look, WalletConnect already has the technology and the network to facilitate that. Now, stablecoins, you mentioned that earlier. It has been one of the strongest narratives, AI and stablecoins, like you said. Where do you think stablecoins are headed in the next 12 months or so? And how may they reshape the current financial system?
So look, I think there's two really interesting things happening in stablecoins right now. One is that almost all of the stablecoins that we have are US dollar denominated. That has made a whole ton of sense for a long time because stablecoins have primarily been used for like trading pairs, for moving in and out of other types of crypto, which are traditionally like traded against the US dollar. And obviously the US dollar is also just a very common currency for people to be able to trade and interact with. So it's kind of made sense that the US dollar was like the first and most predominant form of stablecoins. But when it comes to things like payments and consumer use cases, pretty unlikely that like my mom in the UK wants to start holding US dollars and having to think about US dollar prices as well as British pounds when she's just going to the shop and paying. And so I think what we will start to see, and we're already starting to see this with EURC and other non-US dollar stablecoins, I think we'll likely start to see other currencies having their own stablecoin as well, and an FX market evolving just around stablecoins of different currencies. So I think that's number one. The other thing is that we've seen 2025 has been, I think, the year of everybody launching their own stablecoin. We've seen, I don't know how many hundreds of companies announce, I'm launching a stablecoin, I'm launching a stablecoin. And I can see why they do it, right? Because if you launch a US dollar stablecoin today, you keep all of that yield. So you're making a ton of money. And so for a business, makes sense, launch a stablecoin. For an end user, really, really horrible, because suddenly I have a wallet and I have 20 different stablecoins in it. I have USDC, USDG, USDL, USD1, USD2, USD3. And if I want to make a payment, I go into the coffee shop or I go and buy a handbag and it says I need $100. Well, that's fine, except that I have 20 USD A on Arbitrum and I have 20 USD1 on a different chain, and I can't use them all to pay for a $100 handbag. And so it does create this like additional friction for end users. I like this, if I'm honest, because it gives us another challenge and another piece of the puzzle to solve to make those things easy to use. And again, that's why WalletConnect Pay is like grounded in the philosophy of being cross-chain, asset agnostic, and wallet agnostic. So we're going to make that happen. But it is funny to see like we solve this one problem, but actually we create a whole other host of problems for end users.
Agreed. And I think that anytime we try to solve a problem, we end up in this whole mess, tangled mess of things. And then we create, like you said, 10 different ones. I had an experience as well. I was trying to buy concert tickets and I had a certain amount of stable coins in one denomination, then another. And in the end, I just gave up and I used fiat. And I was really sad that day. Now, our final question for the show is, what is the roadmap of WalletConnect Pay? What can we expect to see in the imminent future, in the next 12 months? Give us some insider scoop.
Here's the alpha on 2026 for WalletConnect Pay. We are launching with an amazing partner in January. It's one of the biggest point of sale companies in the world. And we're going to start to see WalletConnect Pay actually be able to be used in shops, I think all over Europe eventually during 2026. So this is, to quote their CEO, they said millions of stores. So really, really excited about that. Certainly going to put our technology through its paces. We also have some great online e-commerce payments companies coming online so that WalletConnect Pay can be used really easily at the checkout. On the wallet side of the ecosystem, we have this network of 700 different wallets, and we're partnering with many of them to improve that payments experience. So as I said, I think there's still a gap between how pleasant it is to just go and do a single tap Apple Pay and crypto, which is a few more steps today. I think during 2026, we're going to make a very, very distinct improvement on that experience so that for an end user, the process of paying with crypto becomes much more delightful. We need to do that in partnership with the wallets. We don't control that experience entirely, but I think we're going to make really good progress there. And then there's a couple of surprises. We want to reward people who are paying with crypto. We think that that's really interesting. And so I think we can start to maybe think about some incentives for people who are paying with crypto, especially for the WalletConnect community. That's going to be really important. And ultimately delivering a delightful experience for merchants and for our PSP partners.
I am personally so excited. And if anyone watching wants to stay in touch and keep up with all the updates, make sure to follow WalletConnect on LinkedIn, walletconnect.com, and WalletConnect on X. Jess, thank you so much for being here. We appreciate you. Thank you for a wonderful conversation.
Thanks, Diana.